Hi, welcome to our discussion with Michael Blaugrund from NYSE, NYSE Group. He is the Chief Operating Officer there. I'm Shane Swanson with Greenwich Associates, a Senior Analyst with Market Structure and Technologies. Michael, thank you for joining us today. This is kind of our second in a series. We're trying to do a little bit of a new thing, so ask everyone's forgiveness if we have any glitches as we go through. First, just let me ask, how are you and your family doing with everything related to the virus?
Everybody's healthy and doing well. Thanks for asking. I hope the same is true for you. You're looking much more debonair than I am. I'm impressed by your COVID hair. I've got some catching up to do.
Nor will I turn my head enough for you to see the mullet that I have been growing. So. But again, thank you for being here. We've been really finding our way through unprecedented times, not only in terms of volume volatility, but having the entire industry shift its behavior and where and how they're actually getting their work done. It's to me been somewhat fascinating looking over the results of the volumes that have occurred, not only the actual trading volumes, equity volumes have been at historic highs. We've seen our, highest day ever, over 19 billion shares in equities. Last year we were averaging around 7 billion shares a day, and now we're well over 10. But I've also been fascinated by that's one part of the story. The other part is, what does the message traffic look like? And for market structure aficionados, I'll try not to use nerds, aficionados like ourselves, I know that's really fascinating. So can you tell us a little bit about what you've seen both at the SIP offer level as well as at the exchange levels?
Sure. So it is totally sort of uncharted territory here. In some respects, I learned the phrase murder hornet this week. Like everything about life is seemingly like more crazy day after day. But we saw really like unbelievable message volumes over the course of the past 2 months. I think it was the beginning of March that we actually saw the peaks for both NYSE and ARCA equities, about 5 times the number of messages we saw during the typical day in Q4. At the end of 2019, the all-time peak for Opera messaging was about 45 billion messages a day. In Q1, we saw peaks of over 100. We more than doubled what was the historic peak. So it really has been unbelievable. NYSE Group, if you sort of look at our 5 equity markets, the 2 options markets, and the SIP processors, we had days where we processed over 300, I want to say like 325 billion messages. It's about 100 times the number of Google searches that take place in a given day. And I'm not, equating the complexity of those two things, but the fact of the matter is, it's a ton of information that's being processed by the exchange and really by every, market participant. And the resiliency and the stability and the performance of all of our technology is really something to be commended. And there was a tremendous amount of effort after Hurricane Sandy across the industry, but let's be honest, really with NYSE, to reform the BCP planning. NYSE was really dependent upon 11 Wall Street, and we now have not only a much more robust BCP plan that allows for work from home and allows for the operation of the New York Stock Exchange without the trading floor. But, we also have Reg SCI. We also have, very, very resilient and regular disaster recovery testing across the industry. So we all should be commended on those enhancements.
I do find it fascinating. I think one of the challenges that many firms have found themselves in is that their DR BCP plans had generally envisioned either a limited geographic range or a limited time event. And so even I believe plans I have seen or maybe even partially been responsible for in the past, would mention things like pandemics. No one, as far as I know, had thought of a pandemic and then we are now going to force everyone to be at home remote for going on, months at a time. How has NYSE been able to handle that in particular?
Well, more than perhaps many people in the industry, NYSE is really associated with a special location. And so it would have been, sort of heretical, to suggest that you could run NYSE without the trading floor in fairly recent history. We went from being basically 100% work from office to nearly 100% work from home in the matter of a couple of weeks. And if you look at our parent company, Intercontinental Exchange, same sort of numbers. We had more than 5,000 people badging into the office every day, and now we have more than 5,000 people on VPN simultaneously. So it's been a real achievement, I think, by the industry's IT and operations teams. I mean, if you'd taken a poll and you'd asked people 6 months ago, if everyone had to work from home across the entire industry, if we would have experienced, multiple market-wide circuit breakers, how many technical problems would there be? If we had to shut the New York Stock Exchange floor, how many technical problems would there be across the street? That poll would not have had the answer of 0. And it's really unbelievable. And it's just highly, highly commendable. And I'm really thankful for the engagement from our members who've, worked with us, worked with the SIP, worked with each other to ensure that it would be as smooth, not only from the work from home and sort of BCP posture perspective, but also the way the market-wide circuit breakers were handled.
I think that's actually very interesting because obviously we did run into these market-wide circuit breakers. They triggered at least 4 times in a fairly short period of days. What do you think may be the, now that we're looking a little bit more forward, the impact of that? Do you expect there to be a focus on possibly changing any of the parameters? I know there has been, I wouldn't call it a flurry, but at least there's a bit of a snowdrift of concern around closing or the breakers tripping right on the open. What are your thoughts there?
I think that's right. I think that is where people are focusing their attention. I think the archetype for an event when people were contemplating a market-wide circuit breaker was, to use your sort of snow analogy, a snowball picking up speed during the day and wanting to sort of break, kind of a rush for the exits, and ensuring that you wouldn't have, sort of alarm turn into panic intraday, versus opening the market and then closing at 9:30 and 1 second. So there's definitely going to be careful review of whether there should be some marginal reforms. But I think most people would agree that taken at large, it was a very effective implementation. We saw the market halt, get sort of poised and reopen, and in most cases come off of lows. So I think it's been inevitably the market structure aficionados are going to have opinions, and we'll look at it carefully. But I hope we don't lose sight of the fact that they really did do their job well.
Right, and I do think that is, again, one of the points where industry hopefully does get lauded, as it should, for having done the testing, having actually worked through it, and when it was real, when the chips were down, the markets responded incredibly well. You mentioned with the closure of the floor, obviously firms have had to adjust without the NYSE floor and not having the D orders available. I've seen some of the information NYSE's posted on that. There's been a shift in order flow characteristics. I do believe there's been a bit of market share that has moved away, at least in the S&P 500, from the floor, I think from about 12% down to a little over 9%. What are you guys seeing in the close? Well, really in both the open and the close, the auction process, how has that changed without the floor? And then we can get into how we might reintroduce that as we go forward.
Sure. So, this is not an experiment we would have ever sought to run, but it is a really fascinating experiment to see how the NYSE's performance before and after the trading floor closure compares. And if you sort of think about the NYSE value proposition, it sort of has three legs. First, we have world-class technology, and having replatformed all of our markets to run on NYSE Pillar, we've been extremely pleased to see how high performance and consistent and stable that's been. That's still in place. Second leg of the stool is our unique market model, where we have designated market makers with accountability to each issuer. So they're making tight markets throughout the day. They're layering the book with liquidity to try to dampen large moves. Those obligations and those DMMs continue to operate with the floor closed. But we can now look at that third leg, and that's the human interaction on the floor between floor brokers and the DMMs. And it's gratifying to see that when we compare the before and after, we can see that the operation of the trading floor adds real value and saves investors money. Specifically, we see a narrower spread. We see about 30% narrower spreads when the floor is open. We see about 50% more dollar value displayed at the inside. But really the most significant impact is the closing auction. And when the floor is participating, they bring about a third of the liquidity into that closing auction. And so as a result of their unique rules and tools and their relationships with institutional investors, we see the closing auction priced more accurately by about 10 basis points, which sounds de minimis, but when you think about a trade the scale of the NYSE closing auction, that's many millions of dollars a day. And pricing more accurately ensures that the sort of long-term investor is guaranteed a more accurate price, a more stable price, and broader participation.
And of course, you also have that as the reference price to so many other items that the long-term investors in particular, but institutions are also invested in. So stability of the close, price formation is always very important. As we talked about price formation, it's been an interesting, I would say, almost counter-cyclical or counterintuitive move. As the crisis began, and we look back in 2019, TRF volume was floating around 40%. And as the crisis got underway, we did see that drop, pretty abruptly to right above 30. But shortly thereafter, it's increased again, and now we're seeing that upwards of 45%. And I would say, having looked at similar trading in Europe, where there was more of a considered a flight to bright, we went to the exchanges and MTFs there. We haven't seen exactly the same response in the US, and I was wondering if you guys had any thoughts on where that might be coming from.
So I have two ideas. I don't think they're novel. One is we have, and I think that if you look at recent reports from some of the publicly traded retail firms, you'll corroborate this. And they're really extraordinary levels of retail trading occurring now. Right? Part of that is a function of zero commissions. Part of that's a function of a lot of people working from home. A lot of people perhaps not working from home. And it's great to see breadth of participation in the market. But I think you do see that perhaps the wholesaling business and more of the off-exchange trading, sort of balance tip because of that. Secondly, I don't think it's coincidental that the NYSE's trading floor is closed, and we see that there is perhaps a reduction in trading opportunities. The NYSE floor brokers bring unique liquidity into the public market. And whether it's the closing auction being somewhat diminished because of their absence, or it's orders that would have otherwise rested on a public order book that are sort of waiting on a blotter, I think that's definitely a contributing factor.
Excellent, thank you. And I do agree. I think in particular, I've seen the retail volumes, as you said, from the public figures. Clearly, there has been an enormous move there. And as we know, the market structure favors that going towards the market makers initially, at least. So I think some of that internalization increase comes from that. As we look forward, so again, the NYSE's options floor in San Francisco did reopen, correct? That was this week. How has that gone? What changes were made to allow that to happen?
You're exactly right. So we reopened on a partial basis the San Francisco ARCA options trading floor. We reopened with about half of the people that we would typically see in the facility. As you know, San Francisco has a very different public health infrastructure and sort of crisis profile than what we see in New York City. And so based on what we saw in the conditions there, as well as the sort of limited scale of the number of people we would have in the building, we felt like it was appropriate to begin to reopen. So we are operating there, with a very sort of rigorous social distancing requirement, with a face covering requirement, with a prohibition on using public transportation, a number of things we can do to try to keep that community as safe as possible. We'll look at the conditions on the ground in New York and make, sort of a distinct plan for the reopening of the New York floors. But it's been very important, I think, to reintroduce the capacity of the options trading floor into the broader market system, because those trading floors are really crucial for the large and scale and more complex listed options trades. And so, we made the decisions based on public safety, but in terms of sort of adding that into the repertoire for the options community, we've seen the options community immediately respond to its availability, and that floor community is very safe, and they're operating with a choreography that requires distance, but they're very, very busy.
That's good to hear that they're safe, definitely. Actually mentioning options, so the LOMSWAG, which may be the single worst acronym I've heard, so Listed Option Markets Working Group. So LOMSWAG's focusing on options market structure. I know one of the strong points is trying to figure out like strike rationalization. What's the involvement of the NYSE, and what can you tell us about that?
So the LOMSWAG, gracefully named LOMSWAG, it's trying to advance some of the common interests of the industry that are difficult to either unilaterally progress or, but to do it in a way that's thoughtful and doesn't introduce any sort of inappropriate anti-competitive activity. So it's a structure that SIFMA and STA and the exchanges and kind of with SEC involvement and oversight participate in order to try to address some of the common concerns. And you have sort of this prisoner's dilemma with listing strikes, where it would be in everybody's interest, I think, for there to be a harmonization of how different strikes are vetted before coming to exchange. But it's a competitive issue, and it has historically been a matter of some regulatory interest. So trying to come up with a structure that reduces the need for people to quote or to consume the quotes from markets in names and strikes that never trade, and perhaps find more interesting strikes to add so that we are more efficient with the industry's resources is the focus of one of the efforts of the LOMSWAG.
Great. Well, that does bring us back to market data in some ways, and market data is clearly under SEC focus right now. We've seen the January proposal become a proposed order now for national market systems to consolidate the multiple SIPs into a single SIP and change the governing structure. We'd love to get your thoughts on that, as well as the other SEC initiative of potentially going to a competing SIP model and how those might interrelate.
Sure. So I think it's important that people, look at sort of the facts on the ground and consider the broader perspective. The SIPs are much maligned by the aficionados, but this is a service that has dramatically improved in terms of performance, that is now processing quotes and trades in 20 microseconds from many milliseconds 5-10 years ago. The pricing has not much changed. It's about $1 a month for a retail investor. So the value that the SIP has provided, I think, has continued to improve. But the concerns that the industry has about the potential for there to be underinvestment and the potential for there to be conflicted behavior is something which you have to be tone deaf to not recognize. And so, we have advocated for a number of structural changes, including some of which the SEC has included in their rulemaking, which they gifted us on Valentine's Day. And so things like introducing competition into the consolidator space, things like adding odd lots into the SIP product, adding auction information into the SIP product. These are useful structural changes we can make that would benefit those who care about the sort of marginal differences between a prop data feed and the consolidated tape. We've recommended establishing a distributed model, right, where you would be able to collect and consume quotes from all market participants in each of Secaucus, Mawa, and Carteret. These are practical enhancements that I think would particularly be valuable to broker dealers who operate dark pools or otherwise care about having a very fast, very accurate midpoint view of the marketplace. So I think there have been a number of efforts to see evolution and reform there. One thing that really concerns us, though, is that the changes to market structure and the rules that we all operate under should be made according to the prescribed rules. There are rules for changing the rules, and the SEC is a very powerful government agency, but the government has laws that dictate how you change the rules. And so whether it's the transaction fee pilot or the January proposal or some of the market data remanding, which was requested in 2018, these are all fairly improvisational. They aren't structured in a proper rulemaking, right? They're either pilots or a remand order, which I think was fairly novel, or an order to the exchanges to change an NMS plan that would disenfranchise the exchanges. It's just a peculiar way to do things. And so we're reviewing yesterday's order. We haven't decided what our next steps would be, but I would say that, you've been involved in an NMS plan. Like, you have some familiarity with the pace and the complexity of getting these SROs with or without advisor input to come to consensus and come forward with a plan. And the order yesterday requires the SROs to submit a new plan in 90 days. It typically takes the SROs weeks to agree on a press release. So the idea that we would somehow have a successor to two, decades-old plans in 90 days while everyone is not in the office, it's a very demanding order.
Aspirational, maybe the word I would use. Yes, it's and again, I've skimmed it. I wouldn't say that I have completely internalized the 108 pages that they dropped out yesterday, but it's fairly sweeping. The interesting thing to me is always as we look back and look forward, right? So as the SEC, it takes quite a while for them to come up with their proposals, to review all the comments, to come up with their then orders. And yet during this same period of time, we've had this, hopefully once in a lifetime event where the markets, I agree, have responded incredibly well. Market data has been incredibly consistent. You look at the SIP latency data and out to the 90th, 99th percentile, even at the 99.9, obviously it gets higher, but the consistency is actually quite amazing as to where the SIP has been. So I think there is should be some recognition, and I think there has been in some of the studies that Greenwich has done around the investments that have been made in the SIP, the improvements that have occurred over time, and yet there is always something, there's always something more. And as you point to, there are some structural changes there that may be interesting and might get to the heart of what the needs are from the community. Recognizing time, I did want to ask, as we think about structural changes, we think about where the markets are, capital formation, the capital markets themselves are so critical to what we want to achieve as a country. There's been a movement towards direct listings. There have been many more SPACs. Tell us where the NYSE is, what you're looking at, what innovations might be in line from your end on that side.
Well, the direct listing is definitely something which NYSE has pioneered. There have been two in history, and both have taken place on New York. In that incarnation, a direct listing did not involve the company raising new money. It was existing shareholders selling into the public market. But there's definitely an interest from certain companies, and admittedly, this was a stronger interest when the market was less volatile. But there's a continued interest in trying to introduce a direct listing with a capital raise. And so we've been working with the SEC. We've been working with a number of the sort of relevant advisors in the space. And so I think you'll see continued rule filings and amendments to rule filings from the New York in order to try to expand the pathways by which companies can go public. You've seen a number of SPACs go public recently. Since the floor has been closed, we've had over a half dozen IPOs. We've had over 24 companies, raise money on New York with the floor closed, over $6 billion. So even though we're in these challenging economic times, there's definitely still an interest in funding good ideas. SPACs are a really interesting way to potentially put money into the market now, but have an opportunity to look at some of the companies that might be in a private equity portfolio today, but need an exit. Mm-hmm. And so I think there are a lot of people who are, a lot of smart money is moving into that SPAC space right now. And so it's been a very steady drumbeat.
Great. I certainly, want to thank you for your time, Michael. I always like to try to end on maybe something a little lighter. You may have taken a little of the wind out of my sails on murder hornets, but I like to think about, whether it's, Krasinski, Some Good News has been out on YouTube. I think that's been fabulous. Whether you want to kill your time with Tiger King or Killing Eve or something along those lines. What else have you been doing trying to keep your spirits up that you can share with everybody?
Oh, man. Tiger King was great. I am, I've got 3 little kids at home, so it's always an adventure. My youngest, she's 1. She took her first steps this week, so the benefit from work from home was I got to see that. That was fun. And I woke up today to see that, the Treasury Secretary is having a Twitter fight with Axl Rose. So if that was on your 2020 bingo card, congratulations.
Yeah, that might be the one you get to win it all on. Well, with that, Michael, thank you so much. It's been great speaking with you. Really appreciate your time today, and hope everybody stays safe and healthy.
Thanks, Shane. Always.